Alrighty, welcome back to Weenie Trades. I'm going to be giving you a quick Monday trading lesson recap on the trades I took today. And the main lesson of today is why stopping out can actually give you some green days. Stopping out today for me definitely gave me a green day. It helped me stay alive. So in this video, we're going to be talking about why stop outs keep you alive to stay profitable, because if you let the losses get too big, you're not able to recover from them. Why going for bigger targets on stocks can often give back a lot of gains sometimes. However, for me personally, I like to go for those bigger targets because then the delta on the option chain gets ramped up on the contracts. So that's just kind of my style of trading, and depending on the certain stock. But if you're going for those bigger targets, sometimes you're going to be up $100, $200, and you're going to have to take a break-even stop loss, and you're going to have to give up $200 of open profit. And another thing we're going to talk about in this video is why you should always watch the game plan, because a lot of the stocks we trade today were in the game plan Sunday with their entries given. So let's get into the first trade. Our first trade of the day was on AMD, and AMD was being upgraded and it was showing a nice good pre-market pattern. See, look, we had this nice good gap up. That's the gap that I'll just call that the flagpole. And then look, we went sideways right above this 92.72 resistance pre-market. Sellers kept selling it right there. Buyers are stepping up in higher lows. So AMD was actually my favorite pre-market. It was oversold on the, just a little bit oversold on the 180-day 4-hour chart. And I'm just looking for a move all the way up to this $94 a share level. So I'm targeting about $1, looking to enter at about 93. So AMD, since I liked it so much, I wanted to get some size in. Plus the contracts aren't super volatile, so I'm able to get in a really good, decent position. So right here in the morning, we had a quick dip down. Then we started to rip back up. And as we started to rip back up, I went ahead and went long one call contract on AMD, just above 92, 93, with a stop just beneath, 90, 92.50. But I wanted to give that stop really wide. So it was just underneath maybe 92 for the first contract, but the full position size, 92.50. Got a quick move down. I was like, oh, AMD, that's a little bit bearish. But then boom, we got this nice, good tail candle. Look, this was a red candle at one point, and then it flipped green. So that's super bullish. I went ahead and added one contract to AMD, just about 92.69. Got a quick pull down, put in a higher low prior to the previous low. And then boom, we got this nice, good breakout, and then a pull back. And then another breakout, and just over 93 I added. So I'm in with heavy size. I think I have about 3 or 4 contracts at this point. And we get this quick move through the high of the day, but then we pull back. And if I'm on red alert, if you make a quick high of the day and then pull back, that's not a good sign. I'm definitely on high alert. I usually want to see big follow through right away, or at least hold the breakout spot. So when AMD started coming down underneath 93, I knew that something was up. I went ahead and drew my trend line. Not that I always use trend line, but it's a visual guide for higher lows. And as we started to come down underneath 92.70, I had to start stopping out. So I'm wiggled into my position, looking for the breakout. And now that it's going against me, I'm wiggling out of my position with tighter stops. So I come out of AMD just underneath 92.70. Boom, that hurts. Boom, we break the support. This is an important area for me, 92.50. I stop out of 2 contracts right there. And then the last 1 or 2 contracts, I really wanted to give it room because there's a lot of shenanigans. The SPY was selling off. So I really wanted to give it room. And sometimes when you give it room, the trade works out. And, I have an overall bullish thesis on AMD. Less bullish now. That's why I stopped out. But if I have an overall bullish thesis, I want to keep 1 or 2 contracts. Boom, we had this move down. That creates a flagpole. And we have this counter trend consolidation wedge type thing. This is a bear flag, and bear flags generally resume to the downside as it did. And I had to come out of AMD as soon as the bear flag started to play out fully, just underneath 92.19. And that was just, an unfortunate expense trade to start off the day of minus $191. But that's okay. Had it hit our $94 a share target, we would have made about $300, $400, $500 if we got to this upper area. But instead, we had to take the hit. We were in with heavy size, so the loss is a little bit bigger than usual. But fear not, had I not stopped out and I would have held AMD all the way down to the lows, boy, that would be a minus $600, $700 trade. So minus 200 up here. Or if I bag hold, it's minus 700. And I can recover from a $200 stop out on heavy size on a good setup. That's completely fine. I'm not mad about that. It's the way it happens. It's trading. But had I not stopped out, then it could have been really bad. Coming up from a $700 hole is definitely going to take a lot more time, a lot more patience. and it can definitely ruin your day if you get to be down 700 when you could have kept it a little bit tighter. So that was our first trade of the day. Lessons on AMD stopping out really helped save the day, because let's get into the other trades. So our next trade of the day was on Boeing. And Boeing, with the stimulus news, I was thinking it should be at least a little bit bullish. So that's kind of my only fundamental reason. And if I see it selling off, I'm going to look for the dip buy type of trade. So Boeing, move down, move up. And look, broke this this low right here underneath 270.17. Quick flush down to 215.50. Then look, we moved up, put in a higher low from the prior low, and then broke out on really good volume. So here's your higher low from the previous low. And look at the volume. The volume is increasing as there's solid green candles on Boeing. So I'm like, this could be the dip buy. I can buy Boeing right here over 216.35 with a stop just underneath 215.75. And I'm going to target something big. I want the 220 target. So, and the reason I wanted the 220 target, I first was targeting something like the 218. Should have just stuck with that target, right? So I was targeting somewhere around here because of our equilibriums lesson. So here's your high, low, lower high, higher low, bull break. That's where we went long. I anticipated this long. And then boom, we get this nice good push up. And if we draw our retracements, we go from low to high. And look, they kind of petered out right at these upper resistance areas. They're general zones, so sometimes they're not as clear cut as on other stocks. But Boeing made a nice good higher high into the day. I'm still holding my contract. But then look, we put in head and shoulders. Shoulder, head, and then as soon as we didn't break resistance, right here, there's your right shoulder. As soon as we didn't break resistance and started to break down, I went ahead and went flat, Boeing, just underneath there for plus $27. So we're in right here, out right there. Was up about $200. Can't always take them all, but head and shoulders pattern, left shoulder, head, inability to break resistance, and then the breakdown. And so that, and also on that, it was a little bit of a rising wedge. See how we made a higher high without any follow through. So Boeing, stop out, but it was still for plus $27. So I'll take it. You know, it's essentially break even. A lot of decay on the contract through it. But you know, that comes with the territory. So our next trade of the day was our best trade of the day, and it's actually on Disney. And Disney was in the game plan to go long over 175. Well, look at that. Over 175, boom, straight move up to 180. Like 180 is definitely going to be some resistance. High of day is 179.792, but we're looking to go long on Disney. There's earlier in the day, there's this nice good triangle wedge breakout on slightly increasing volume. So there's a little trade earlier in the day, but I saw that this breakout, and then as we pulled back, I went ahead and went long on Disney with the stop just beneath 177. And boom, we push up, pull down, head and shoulders. Do you see the head and shoulders? Left shoulder, head, right shoulder, breakdown. And I unfortunately stopped out at Disney right there, just at about 176.89 for a small little stop out. But that's okay because I still have Disney on my radar. I can stop out, let Disney sell off, or confirm a different pattern that I might like and has a different probability on the second time around, because at that point in time, you don't know how low Disney's going to go. It, of course, was just a quick lower low into a bull break. But Disney, later in the day, were able to catch it once we saw this nice move up. And look, we went sideways for such a long time. So we went ahead and went long on this bull flag, just over 177.70, with a stop just beneath 177.22. And this is the one that we caught really well. Nice, good higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Look at this. This is how I nailed the high of the day, pretty much. I got out at 179.74, right up here in this area. Look at the volume. That's capitulation type volume. Disney was either going to break out and continue, or it was going to sell off. So in the short term, with my naked call options, I'm going to want to take some profits. So then later in the day, Disney came back down to, test this former breakout area. It's a healthy retracement from the highs right in this zone. See all the interaction, rejection, gets in, breaks out, stays within, breaks out, back test, pushes up. If it's coming back into that zone, I want to get long Disney again. So what I did is I went ahead and got long Disney just over 178.23, and I ghetto spreaded this. And I ghetto spreaded this right here at about 178.94. Nice good increase in volume. The SPY was selling off and being a little bit choppy. But Disney, good revenue trade, from stopping out to later getting, plus $300 and more. And so that was a nice good revenue trade to continue the day. And so our last trade of the day was on Aapl, AAPL. And Aapl, if we go to the daily time frame, we mentioned to go long over 133.50. Well, Apple did the deal. In fact, the low of day was 133.50. There's your move up. There's your flagpole. Boom. There's your pop from the gap up. Small little pullback first thing in the morning. Right to low of day, 133.50. So there you go. There's your Apple trade. Perfectly in the money. You didn't have to deal with a single cent of being in the red if you took the entry from the game plan. Not to say that you should or have to take any entries. That's just what I'm doing. But I unfortunately missed the Apple one, so who am I to say it? But you theoretically could have nailed the low of the day. But we had a nice, good Apple position, buying the 136 call, selling the 140 call. We're still holding our shares. But Apple, earlier in the day, I actually took a stop out. So this is a lesson on why stopping out can still give you a green day. So Apple, I went ahead and went long Apple right about here, this early morning bull flag, 134.74. And we got this nice good breakout, pull back, double bottom, but then failed to break resistance, breakdown. So underneath the, right about here, I had to stop out of Apple for like minus 10 or $20. But that's okay. Later in the day, we're still watching Apple. And I can just scalp it on Webull. We made a lower low, but it's compared to these lows, but it's still a higher low from the initial morning low, this area over here. So I'm still watching Apple, and then look, Apple did this nice move up, sideways consolidation. This is a nice, good, juicy bull flag. Not the best, a little bit of increase in volume, so there's some slight confirmation. But Apple, because of the daily chart, I'm looking to go long on Apple because that's giving me the wiggle room for Apple to push up. So we went ahead and went long right there and at Apple. And I just came out right about 136.35. I think this lower low got me over here. So long at 134.77, and then this lower low got me out. So that was Apple. Super fun day, plus about $500. Come check us out at Weenie Trades Live, and you can see it all happening live. You can see the Apple call outs. You can see the SQ dip buy from 220, and you can get filled right at the lows right with me. And you can see tons of other different trades, ask questions, come say hi, and hang out. Alrighty, thanks for tuning in. See ya.